आले का ते जाऊन घे. अरे हे बंद आहे काय? एक मिनिट. हा, चालू करून घे. Am I audible properly? Okay. Good evening. Yeah. Just hold for 1 minute. Yeah. Okay. So, like I mean, the topic which we are going to start, this is already we covered, but as per the syllabus, it is again. So that's why we need to understand. Okay. So overall, for members in public practice and industry. Okay. So for everyone. Okay. So, like the key principle, integrity and objectivity, that words you need to keep in mind. Okay. So, because you may get 5-7 question on integrity and objectivity. Integrity is basically members should perform all professional responsibility with the highest sense of integrity, ensuring honesty and fairness in their action. Okay. So, can anyone give the example of integrity? Any example?
If a company asks us to, provide some details of another company or some insiders, so we should not,
Yeah, we
give to
should
them.
not disclose to third party. Right. Okay. Integrity. Okay. Should not disclose to third party. And very simple, disclose to third party. Okay. And very simple example is basically you need to respond within a time. Okay. So this is basically the like integrity. Okay. Then objectivity. Objectivity is member must maintain objectivity and free from conflict of interest in discharging professional responsibility. So, any practical example of objectivity?
You should not. A auditor should not give a opinion on one perspective. He need to check everything, every background, and then give his opinion.
Yeah, right. And the second and the very simple is basically you should not accept any assignment when there is a conflict of interest. Okay, interest. Then
Yes.
professional competence and due care. Why I'm giving a simple example basically so that you can, whenever you get the, because in examination they're not going to ask what is integrity or what is objectivity. In examination they will give a case and then you decide what happened. Professional competency in due care. So any practical example for professional competency in due care? I think you already gave some reference when you are discussing objectivity.
Regarding the auditor needs to check each and
Yeah, thoroughly,
everything.
and then okay, and then he need to raise an opinion. Second aspect means very simple. GST consultant, okay, should not take any assignment which is related to the valuation. Okay, so because the valuation it requires some specific skill, like a CFA qualified can do it. Okay, so GST consultant should not take any assignment related to the valuation. If you can do it, then and only then you should do it. And second, thoroughly, you should be thorough in your approach. Okay, you need to apply your technical skill properly. You need to means whenever you come across any judgmental aspect, so you need to evaluate with respect to all aspects. It is not like this just you have some biasness, means you try to find out only relevant evidence, whatever may be the evidence in like coming in front of you. You need to evaluate each and every evidences and try to get an insight what are the possibilities, and then you need to form an opinion. So always whenever you are doing any work, whenever you are doing any evaluation, you need to thorough in your approach. Confidentiality.
To not disclose the confidential documents and everything with
Yeah,
another.
yeah, not to disclose without client consent. There are only few exceptions.
The exceptions are if uh, to the
Yes,
legal bodies, if they ask for the documents, we need to share it
legally
with them.
required. Legally required.
Yes.
Okay, means yeah. Second, peer review. Okay,
Okay.
and the
I
state
don't know.
state society AICPA. Okay, in any inquiry
Okay.
which is related to the professional institute, that there you can disclose the information, and if it is legally required, legally binding on you. Okay, even for the client benefit, you cannot disclose the information. That also we already discussed. Okay, then professional behavior. Okay. Any example for professional behavior with respect to CPA?
It is that the auditor must not get involved in the management activity.
Uh, See, this is basically the independence approach, not for professional behavior. Okay. So if the CPA get involved, means if he is doing a job, he need to involved in a management activity.
Okay, sir.
Okay. So professional behavior is basically means you can imagine a situation that the competitor of your client approach to you. Okay. And ask for a of your client approach. And I mean, he's not asking any info. If he asks the information, then it is a matter of confidentiality. But he may approach to you and just say, prepare a negative financials, or not exactly, or give a negative opinion. Okay, so this, and if you act on the competitor's will, okay, then it is not the professional behavior. He should refuse
Okay,
the
sir.
request. Okay, so professional behavior means if you are working for someone, then you are loyalty with that person. Okay, so that is basically the professional behavior. So this kind of example just keep in mind. Okay, so that whenever you will get the questions, okay, so you can apply and maybe it help you to select the correct alternate. Okay. Next, for members in practice, means there are certain threats. I think we already discussed, but again we will discuss. So self-interest threat. Okay. So you can give the example. Example for self-interest threat. Any guess?
No idea, sir.
See what right here occurs when a member could benefit financial or otherwise from an interest in a relationship with a client or client personnel. If you're auditing a firm, okay, where you can become a partner in future. Okay, so can you audit with due diligence?
No, sir.
Yeah, this is one. Means I'll give some example. Then, if there is any overdue fees, and the client may say, if the audit for a particular period goes well, then he will release your past fees. Okay. Third, charging of contingent fees. If you are charging a contingent fees, okay, so I mean the factor on which your fees get calculated, you are trying to highlight that factor. Okay, and the potential employment. Okay, if you are doing an audit and during the audit, you will get the opportunity or there is a discussion going on. Okay, once you finish this audit, then we will hire you. Okay, so these are basically I mean, the auditor have an interest, and because of that reason, he may not issue unbiased, or not issue, or he may issue the biased audit report. Okay, so that is basically the self-interest threat. Audit is like this only, means you just need to keep in mind the practical scenarios. Self-review threat.
Checking your own work.
Yes. So when it happens,
when when the management or someone asks us to check if
okay, your own work. See, means it may be a complicated, but try to prepare an example in which scenario, means what you did first and then what you do afterwards. Okay, we discuss a lot on this. Okay, try to guess something. When the situation
okay,
arises, you are checking your own work.
so I have made an audit report for the company, and the CFO, the director, knows me, and he has a trust on me that you have done it correctly. The internal audit,
Yeah, so
they
you
want to
did
review.
internal audit, okay, and now you are doing attestation engagement or audit, okay. Then you can say checking your own work, okay. But you, if you are related to the director, it is a part of self-interest threat or
Okay,
familiarity threat, not self-review threat. Okay, self-review,
okay,
self-review example as is basically like you did internal audit and now you are doing performing the attestation function. Then it is a self-review threat. Okay, you supported or implemented the accounting software and now you are doing an audit or review. Okay, because if you implemented the accounting software, you decided what control we need to maintain, so you are checking again your own work. You prepare the tax return or any like how I can say any valuation services, okay, and now you are doing an attestation. Okay, so these are basically the self review threat. Okay, so here it is essential that you are providing consulting as well as consulting oblique management as well as attestation function. Even, okay, you are associated with the client for say for year 2025 as a CFO. You leave this organization as on 31st December 2025, and in 2026 you are doing an audit for this company for 2025. Okay, so that is also, even though while doing an audit you are not associated with the organization, but you are doing an audit for a period of 2025 when you are associated with this organization as a CFO. Okay, so that is also the kind of self review threat. Okay, of course independence also get impaired, but beside that you are going to check your own work. Advocacy threat. Any idea?
no sir.
Okay. So what is occurs when a member promote a client position to point that objectivity is compromise. Okay, so first, what is objectivity? Again, we already discussed.
To
Simple example.
have an unbiased opinion.
Yeah, you should be in a position to give an unbiased opinion. Okay, so that is basically the objectivity. Okay, when objectivity get compromised, if you are insisting someone to buy the share of your client, objectivity get compromised.
Yes.
Okay, that is basically the advocacy threat. Okay, so how I can say, okay, so when you are promoting a client, promoting a client product, okay, shares is basically the basic example. Even if whatever may be the like activity you are doing, because of that reason, client getting an advertisement. Okay, so if you are promoting their product, that means the objectivity get compromised. Okay, so second example, if you represent the client, okay, keep in mind, if you represent the client in any legal matter, okay, so now you have an option, either you need to do an unbiased audit, or whatever the legal matter going on, okay, it is or, okay, legal matter going on, you need to prepare for it. Okay, see what happened, we know, like if you are representing the client in any legal matter, we know what mistake client did, but we are trying to hide. Okay, so if the CPA is representing the client in any legal matter, he cannot do the unbiased audit. Clear? So that is also the advocacy threat. Okay. So when the member or the CPA try to uplift the position of the client, it is clearly an advocacy threat.
Okay, sir. Understood.
Okay. Then familiarity threat. Threat. Any example for familiarity threat?
So is it mean that if we know the client, so we will do give a biased opinion and we will do according to the client?
Yeah. So, I'll give one more example. But yeah, of course, basic is basically if we are knowing a client since long, okay. So there is a some emotional bonding happen, and because of that reason, we are trying to protect the client interest. Okay. So this is one long relationship, one aspect. Second, if your close relative associated with the client. Okay, in that situation is also you are protecting the interest of your relative, and you may give a bias opinion. So that is also the familiarity threat. Okay, or if you are an ex-employee, Means you do not have any intention, but because of continuous closeness, you may like give a bias opinion. So that is basically the familiarity threat. Then intimidation threat. Intimidation threat.
No idea, sir.
Okay, what is intimidation? If someone creating a pressure on you, okay, so it is simple basically. If someone give a threaten, say for the client have a good connect with some politicians, and like you are the auditor of the client, okay, so politician gave a call and he is giving a threat to you, okay, you need to do whatever is the requirement. That is basically the intimidation threat. Okay, second, client may say I will withhold the payment if withhold payment if he is not getting a desired audit report.
Understood, sir.
Okay, any kind of undue pressure. So these are some threats what we discussed. So we always need to evaluate the threats. What is the impact on your professional approach? Okay, and accordingly you need to take a decision. Okay, then safeguard. Implement safeguard to eliminate the threat or reduce them to an acceptable level. Okay, so it is basically if it is created by it's created by the profession regulation legislation or regulation. So you need to follow the professional standard, maintain the disciplinary mechanism, and continuing educational requirement, and then implemented by the client policies and procedure to ensure appropriate oversight, and implemented by the firm policies and procedure within the CPA firm to promote compliance and professional standard. We need to maintain the documentation. Okay, so same means this is what we discussed for the members in practice. Now it is members in industry, but more or less it is same: self-interest threat, self-review threat, advocacy threat, familiarity threat, and the intimidation threat. Okay, additional threat which we need to discuss now. Management participation threat. So here example already given. So can you give any other example beside whatever given here? Any example? If you're performing any management, like you're preparing the balance sheet for the management, okay, or you are hiring the staff for the your client, so that is basically the management participation threat. Hiring hiring staff, preparing financials. Okay, these are all the tasks which is management supposed to do. Okay, but as you are doing, that is basically the management participation threat.
So you are writing something, so we are not able to see you write.
Okay, just a minute. It is since when this happened?
From the starting only, so I never paid
Okay.
attention to that.
Okay, okay. Let me check. Yeah. Hmm. Why it is not arriving? Just hold for 1 minute.
Okay, sir.
शटडाऊन करून चालू करू वाटलं.
Hello.
हा. व्हिडिओ पण चालू कर ते बघतो. अरे सौरभ गेलं परत. हा ओके. Okay. Okay. Am I audible properly?
Yes, sir.
Okay. Then bias thread. So you can see the example and try to answer or try to give any answer. Bias threat.
Does the CPA is influenced to use a particular method to do
Correct,
the
correct.
audit or
Right,
something?
right. Particular method which he may use in his previous assignment. Okay, so that is basically the example of bias threat. Correct. Okay, or yeah. Then familiarity threat we already discussed. Undue influence threat we already discussed. Economic dependence threat. Any guess?
If that client is a big client and our financials are somewhat dependent on
Yeah,
him.
he can become a financer for any other
Yes.
project. Financer, yes. Then competency threat. That also we discuss. Regulatory or legal threat. Regulatory and legal threat for the CPA.
If the client asks the CPA that we don't want to pay more tax, we just want to pay this much amount or something like that.
Regu- Okay, so it is not like this. See, like what happened if some accounting standard get changed. Okay, so client and CPA both need to change their work strategy. Okay, to avoid that they may go with the old provision. Okay, so that is basically the.
Okay.
Then role conflict threat.
So if the CPA is also a part of the board,
Yeah.
yeah, he also has to act as a CPA.
Yes. So it is basically, and it happens mostly in case of not for profit organization. In other cases, I mean, for profit organization, it is bad, it is not allowed, but not for profit organization. If you are honorary board member, in that situation, you can do the or you can provide the audit service. Okay, so now like independence in public practice. So a CPA firm identifies a self-interest threat due to partners' financial interest to the client. To mitigate this threat, the firm requires the partner to divest the interest or remove themselves from the engagement team. Okay, so like he has some stake in the like the partner has a some stake in the client, okay, or say for the CPA A and the CPA B, they have a combined firm, and the client in client ABC, CPA B has a some stake. Even though the audit done by CPA A, still it create the self-interest threat. So either CPA B need to remove, or he should not engage in any way in the audit assignment. Then confidentiality of the industry in industry. So an accountant working in corporation identifies the threat to confidentiality due to access to the sensitive financial information. So safeguard includes strict data access control and confidentiality agreement. Okay. So CPA, if he is doing a job with the organization, he is aware the kind of order they are getting. Okay. And he should not spread this information with their families and friends. Okay. So that he need to maintain. Advocacy threat in public practice. A CPA has to promote client tax position aggressively. Okay, so that is also the advocacy threat. Means you are trying to claim as much as possible refund. Okay, so that is also the advocacy threat. And familiarity threat we already discussed. If we have a long-standing relationship with someone in the client organization or with a client, then it is a familiarity threat. Intimidation threat, we already discussed. Self-review threat, management bias threat. Okay. Competency economic. Okay. Okay. Now some example question answer. What is the primary objective of the conceptual framework for member in public practice and industry?
Option B.
Yes. B is the right answer. Yes. Question number 2.
Self-interest threat. Option
Yeah. B. Correct. Question number 3. We just discussed.
Option B.
B. Yeah. Correct. Question number 4. I forget to tell you, actually, it is in my mind, but I forget to tell you, but you can identify.
Option B.
No. What is the common safeguard against familiarity threat due to the long relationship with the client? How you can maintain a safeguard? B is not the answer. Yes? Aksa? C. Yeah, rotation of senior audit team members. C is the right answer. Question number 5.
Option D.
B. Yeah, correct. Question number 6. Very simple.
Option A.
A, yeah, correct. So whenever you are giving an answer to the audit question, just evaluate if you are a CPA, then what would be your role or what would be your action. Question number 7.
Option B.
Yeah. Question number 8. Preconceived notion.
Option D.
A. Bias threat. Question number 9.
Option D.
B. Yeah. Question number 10.
Option C.
Option.
C.
What step should CPA take if they face? No. You cannot ignore the pressure and process as planned. I mean, see, sometime means that also you should do. But before that, you need to escalate concern to the higher level of firm management or external regulatory bodies. Okay, you cannot just ignore. So B is the right answer. Okay, then this is the new topic. Securities Act 1933. So Securities Act is basically just like we have a SEBI in India. Okay, they have a SEC. Okay, so it applies to the issuer company. Okay, so issuer company means those company who those companies accept money maybe in the form of equity or debt. It is not only the equity, it is any form from public. If you are debt from public, if you are collecting the money from friend and relative, then you do not require to register with the SEC. But if you want to offer or you want to accept the money from general public, okay, so in that situation you need to register with the SEC, Securities Exchange Control. Okay. So the act aims to ensure transparency in the financial statement of corporation issuing securities and to protect investor from fraud by requiring that investor receives significant information about securities being offered for sale and prohibiting deceit and fraud in the sale of securities. So whenever you are selling a securities, whether it is equity or the debt, okay, to general public, you need to first get registered yourself under Securities Act, okay, and with an SEC, Securities Exchange Control. Okay, registration of securities means equity securities here is basically equity or debt instrument, oblique debt instrument. Equity include both common stock as well as preference stock. Okay. So security must be registered with the SEC, providing comprehensive information about the issuer, security, the business, audited financial statement, and the risk factor. Then prospectus requirement. Prospectus is basically so that general public can submit their offer to buy, can submit offer to buy. Okay. So prospectus, a part of registration statement, must be provided to potential investor detailing the company's financial status, management, intended use of the funds, and the investment risk. Okay. So this information we need to provide in a prospectus. Okay. Prospectus is basically a document which we are float in a public, general public, so that they can get the information and they can submit their offer to buy. Okay, so that you need to keep in mind. Offer to buy means once the prospectus issued, okay, general public apply for the shares. That means apply for the shares. Okay. Then exception and exemption and exception. Certain securities offerings are exempt from registration requirement, particularly those covered under regulation D, which include rule 504, 506, that we will see later on. Okay, private placement. As I said, if you are floating equity, okay, within your common friends or within your known contact, then you do not require to get register the securities with the SEC. So regulation D provide a series of exemptions that allow companies to raise capital through the sale of securities without the need to register with the SEC. Okay. So Form D, companies that sell securities under Regulation D, exemption must be filed Form D with the SEC. So Form D is for the, that you need to keep in mind. Form D is for the exemption, which you need to file. Okay, Form D is brief notice that include basic information about the company's executive and its offering itself. Okay, but they do not require to file the statement with the registrar. Rule 504, a small business, okay, so that you need to keep in mind. One is Form D you need to file, and then Rule 50 as per Rule 504. Okay, so this is for small companies. Okay, allow small business to raise up to 5 million in a 12-month period. Month period. Okay, sales can be made to unlimited number of investors. Generally, there are no specific disclosure requirement unless the securities are sold to non-accredited investor, in which case state law may require disclosure. Okay, so what is non-accredited investor, that also we will see. Okay, first keep in mind Rule 504 state, if you are issuing 5 million in last 12 months, then you do not require to register the securities with the SEC. Okay, and the non-accredited investor, that definition also we need to keep in mind. Non-accredited investor, we will see. Then Rule 506. Okay. Non-accredited investor, this word you need to keep in mind. Rule 506. Okay. So the most used exemption under Regulation D, it allows companies to raise the unlimited amount of money. Okay. So it is not for a small company. Not for small company. You can raise unlimited. Okay. But the condition is permit offering to unlimited number of accredited investors. Okay. Non-accredited, then accredited. Okay, so those who are, means there is a condition for accredited. Okay, and those who are not accredited, they are considered as a non-accredited. Keep in mind. Okay, so under Rule 504, you cannot issue a shares to non-accredited investor. Okay, so in 504, cannot issue shares to non-accredited. Okay, see, Generally, there are no specific disclosure requirement unless the securities are sold to non-accredited investors. If you are selling the security to non-accredited investors, then you need to give the disclosures. Okay. Now, like 506B and 506C that you need to keep in mind. Okay. Just a minute. Accredited. Okay, it is not given. Okay, I'll finish 506 B and C, and then I will give the accredited and non-accredited. Okay, so permit offering to an unlimited number of accredited investors and up to 35 non-accredited investors without general solicitation and advertising. Okay, so without an advertising. So important is basically you can sell the shares without advertising. Okay, so here unlimited accredited, okay, and 35 non-accredited, okay, that you need to keep in mind. Okay, so that is, and the 506 allows issuer to broadly solicit and advertise their offering, but all purchases in the offering must be to the accredited. Means if you want to do the advertising, then you need to sell only to accredited investors. Okay. Okay. So accredited, I will tell you. First, just keep in mind, accredited investors means those who are financially sound. Okay. So there is a income test. You will get this information somewhere. Okay. Maybe it is not given here. So where income is more than 200,000 in a year, 200,000 US dollar in a year. Okay. Then net worth, as per net worth, there should be a 1 million US dollar, excluding your residential house. And the professional certification. Third one is professional certification. Means if your certification justify that you have a knowledge of stock market, okay, so then you can consider as a accredited investor. Okay, so you just keep in mind income test 200,000 US dollar and the net worth 1 million US dollar. Okay, so that part is not in your course. I'm just giving an information purpose. Okay, just keep in mind, if the accredited investor are those investors who are financially sound and have a knowledge about the stock market. Non-accredited investors are those investors who are not financially sound or they don't have any knowledge about the stock market. Okay, so if you are issuing the securities to the non-accredited investors, okay, so then you cannot advertise and only you can issue maximum 35 non-accredited investors. Okay, and in 504 you can issue you can raise only up to 5 million in last 12 months. So that condition you need to keep in mind. Liabilities and penalties for misstatement. So those involved in preparation of the registration statement, including directors, officers, and auditors, can be held liable for misstatement or omission that result in investor losses. Okay, and the impact on auditing. Auditors role, auditors are required to verify the financial information in the registration statement and due diligence. The act mandates thorough due diligence to ensure the accuracy of the financial statement and disclosure. Okay. So more, the important is 504 and 506. So I'll just summarize again. 504, just keep in mind, 5 million in last 12 months. Okay, and then 506. So there are like B and C. Okay, in B without advertisement. Okay, and here with advertisement. Okay, only up to 35 non-accredited. Okay, here only for accredited. Okay, so here unlimited accredited. Or you can say the difference is zero non-accredited. Zero non-accredited. Accredited investors are those who are financially sound or having a knowledge of stock market. Non-accredited investors are those who are not accredited investors. Other exemption, intrastate offering exemptions allows issuance restricted to the single state where the issuer is doing a business aiming to facilitate the local financing. Means if you are issuing the securities only within the state, so you do not require to register with other states. So issuer must be resident and doing business within the state where the offering is made. Okay, so see, like India, the means we have a centralized body. Okay, but in US, every state have a registration, means the registration body. Okay, Regulation 8, Tier 1 and Tier 2 enable smaller companies to raise money with more streamlined regulatory process. So Tier 1 allows offering up to 20 million in a 12-month period, and Tier 2 allows up to 75 million. Small business investment companies. So these are privately owned investment funds that are licensed and regulated by the Small Business Administration. So SBIC can raise capital to invest in small business with the advantage of favorable terms under the federal regulation. And the regulation crowdfunding, so allows companies to raise up to 5 million through crowdfunding platform within a 12-month period from both accredited and non-accredited investors. Securities of municipal, state and federal government. Security issued by municipal, state and federal government are generally exempt from the registration requirement. So that also you need to keep in mind. Any securities issued by the government organization, they do not require to register with the SEC. This includes securities backed by the full faith and credit of the government, revenue bond and other governmental issuances. Charitable organizations, securities issued by non-profit organizations including charities, educational institute and religious groups are typically exempt from the registration. Okay, so these are basically the registration requirement. Okay, so here regulation 8, Tier 1 and Tier 2, these are basically, they need to submit the prospectus. Okay, it is not like this, they are exempt, but the conditions like prescribed them is slightly stringent. Then purpose of the Securities Act 1934. So what we saw, this is Act 1933 which deals about the primary market, I can say, when you are issuing a first time IPO. Okay, like Securities Exchange Act 1934 that deal with the secondary market. Okay, so Act aims to govern the trading of security in the secondary market, enhance the transparency, prevent fund and establish Security Exchange Commission which enforce laws against the market. So see, SEC 1933 and SEC 1934. There are two acts. This deal with the IPO or the primary market. When the company directly issuing the securities. Okay, this deal with the secondary market, stock exchange. In India, SEBI is the only SEBI is the only authority who deal in a, or only act who deal in a both the market, for both market. But in US, SEC 93 is different act for the IPO, and SEC 1934 is different act for the secondary market. Okay. So establishment of the SEC. So Securities and Exchange Commission was established to enforce federal security law and regulate the securities industry, the nation's stock and option exchanges, and other economic securities market in the United States. Regulation of the broker dealers. So Act regulates firms that are engaged in trading securities for both their own account and on behalf of their client. It requires registration of all broker and dealers with the SEC. So broker dealer. Okay. So that relationship regulated under Securities Exchange Act 1934. Reporting requirement for public companies. That is also the important. Publicly traded company must file annual and quarterly report along with other public report that provide a comprehensive overview of the company's performance and financial condition. Like we yearly file the financial statement with the ROC in India. The same way, like the issuer companies need to file the financials or some report, interim report, annual report to the SEC. That is also governed by SEC of 1934. Prohibition of fraudulent practices. So this includes manipulation of stock prices, insider trading, and other fraudulent activity that affect the fairness and integrity of the security market. Then the regulation of exchange. Stock exchange and other security market must register with the SEC and comply with its rules and regulation, ensuring fair and orderly functioning of the market. Proxy solicitation. Okay, so stock exchange is basically the Wall Street. Maybe you heard the name. Okay, so that also get registered themselves under this act. Proxy solicitation. So Act regulate proxy solicitation, which is the process by which corporation obtain the shareholder votes and corporate matters. So proxy is basically means if you cannot appoint, means you are a shareholder, Mr. A is shareholder, okay, and he need to vote, okay, but he can't because of unavailability. Then what he do? He will appoint a proxy which we consider as a representative. So how we can appoint the proxy and whatever may be the method, rules and regulation applicable related to the proxy solicitation, that is also given in the SEC 1934. Tender offer. The act also governs the tender offer, providing the detailed rules and regulation how they must conducted, and such as requiring timely and truthful disclosure of the information relevant to the offer. Tender offer. What is tender offer? Someone want to buy the shares of a particular company. Buy, not sell. Company. Okay, so it is, again, keep in mind the buy word I am using. Okay, if I want to acquire one company and I am not able to deal with the management of the company, so the second alternative with me is basically I need to gather 51% shareholding. Okay, and how I can do it? I can float an offer to existing shareholders. Okay, if I float an offer to existing shareholders with some premium prices, so some shareholders may attract and they are ready to sell. Okay, so here the management involvement is not arises. Okay, so you can take over the company outside the, I mean, without discussing with the existing management. Okay, so it is basically the buy the shares. Okay, if I want to buy the share of a particular company, instead of approaching individual shareholder, what I'm going to do, I am floating a tender. Okay, if anyone want to sell his share, he can approach to me and sell the shares at given prices. So that is basically the tender offer. Insider trading restrictions, as we already discussed, I mean the confidentiality of the information. So that the act enforces rule against the insider trading, which involves trading a public company's stock or other security by individual with access to non-public information about the company. The same concept. You know you are getting a bigger order, so that's why you started to acquire the shares. That is basically on the basis of internal information. So that's why we consider this as a insider trading. Okay, and there is a clearly ban on a insider trading. Okay. Market manipulation rule prohibits specific type of market manipulate tactics, ensuring that the securities market are fair and honest. Okay, so these are basically the like role of the SEC as per the Security Exchange Act of 1934. Okay. Okay, so I think we need to stop here because it is too theory. Hello.
Yes, sir.
Okay, and we will take a short period on weekdays as well. So maybe 9:30 to
Okay, sir.